Assalamualaikum and good day to all of you. We will continue with the next topic related to bankings and the management of financial institutions. I hope this video can provide the benefits and understanding to all of you. Now let's take a look at the selected contents that will be discussed in this topic. There is a lot of content that describes about this topic, but I only chose 4 main topics to explain about the banking management. The first one will be the principles of bank management, followed by elements of bank management, the importances of the bank management, and the last one, what are the problems in the banking management. Now let us start with the first subtopic related to the principles of the bank management. As we all know, the goals of the bank management is to create an organic and optimal interaction systems between the various aspects of banking mechanism in order to maximize profits. In all business systems, the ultimate goal is to achieve the maximum level of profitability. This also coincides with what is targeted by every banking system, because banks are also one of the businesses. The effective banker who are managing the banking systems will be able to handle both managerial and technical banking tasks. Although a bank, like other businesses, which is a financial institution, its primary goal is to increase the wealth through profits. Although, as said, a bank is a business, but the bank industry is distinct from other industry. Other companies can transfer or shift the goods or services from factory to office or even export to other nations, but bank can only transfer funds or provide services after meeting the demands for a loans in the area where the bank's office or branch is located. The efficient management of the bank will provide a high quality service and efficient management through efficient organizations management. Now let us see what is the mean by the bank management by definitions. Bank management can be defined in a variety of ways. In general, it refers to the process of overseeing a bank's statutory activities. The unique purpose of bank management is to describe the financial relationship related to banking activities and other relationships, as well as perform management tasks in the banking. Effective bank management procedures are significantly responsible for the optimizations of the profitability risk ratio in bank lending operations. One of the characteristics of both entrepreneurship and banking culture is the ability to take reasonable tasks. The following characteristics determine the reliability of the bank management. The first one is management expertise in strategic analysis, planning, policy developments, and management functions. The second one is the quality of planning. And the third one is risk management, which is the credit interest rates and currency risk. The fourth one is liquidity management. We will discuss in the later. The fifth one, management of human resources. And the sixth one is creations of control systems, which is audits and internal auditorings, monitoring of profitability and risk liquidity. And the last one is unified information technology system, which is integrated workflow, accounting, current analysis, and control strategic planning. All the above conditions show themselves during the implementations of bank management and its components. Now let's continue by looking at the concept of bank management. Bank generate cash by accepting surplus savings as deposits or shareholder capital, or by borrowing from other institutions such as central banks. A bank must bear some collection costs and other related charges in order to collect these funds. To become an effective and profitable bank, a bank must profit by collecting funds and investing them after deducting a cost of funds and other administrative expenditures. A bank must choose an appropriate organization structure to carry out its tasks in order to develop our professional management teams by creating a bank management procedure circles. The manager goal is to create a real whole that is larger than the sums of its parts, a productive entity that turns out more than the sums of the resources pulled into it. That's what the Peter F. Drucker says about the concept of the bank management. This is the procedure circles that has been created to be an appropriate organizational structure in the banking systems. But the management process, on the other hand, begins with the plannings to determine courses of actions. The second one is continue with organizations to coordinating of all activities and resources. The third one is leading for managing and motivating peoples, and the last one is to control by monitoring and evaluating activities. The perfect synchronizations of all of these factors can provide ideal management of the banking systems. Now let us look at the elements of the bank management. Under these bank management elements, there are 13 elements that are emphasized by each of bank management to achieve the targeted objective. The first element, we call it plannings, which is planning is the first steps in the banking management process. A corporate firm's future path of actions is stated through the activity of planning. Planning provides solutions to queries about the bank as a whole, a specific branch, or a specific work decisions in bank administrations. These inquiries may include the following. What role should a bank, branch, or work decision play? The second one, what roles does its work division play in the activities of the others? And it also can ask what kind of business does the bank conduct? Is there any specific or specials about the bank services? The second element, we call it objective. All efforts are aims toward the achievements of the objective, which are aimed by the managers of the banks. All the objectives that may have been set by the manager of a bank to make the bank more efficient, successful, and responsible. You can get more details regarding these elements in the flipbook provided. Policies is also the elements of the concept of bank management. The establishment of bank policies naturally follows the settings of objective. Policies are broad declarations of intent intended to elicit truth and actions in the decision-making process. Pricing could be an example of a bank policy. People who are concerned about the planning can benefit from the policies. The terms rules and policies are not interchangeable. A rule necessitates the takings or non-takings of prices and definitive acts in a given situation. A bank may ask that a company openings an account submits a resolutions prepared by the company's boards of directors authorizing specified individual to sign checks and borrow money. This would be an example of the rule. Following the formulations of the bank's aims and policies, the next step is to devise a strategy for achieving these goals and objectives. While objectives are a subjective choice about the enterprise quality, direction, and pace, strategy is the blueprints that a bank uses to achieve those goals. Among the issues in any business, including banking, is to communicate the set objective policies and operating procedures to all who needs to achieve what has been targeted in the banking management. Organizational structures is the extra sense of the bank management. It lies under the same umbrella of the plannings. The relevant components are groups to fulfill the goal after the objective and regulations has been established. The primary goals of organizational actions is to generate the anticipated profits. Organizations can incorporate other production aspects as effectively and efficiently to obtain the desired result. Working together is what coordination entails because group skill is the most important factors in coordinations. It's important to remember that certain independence is required for innovations of wealth management and can achieve the goals that has been stated. The most talked about topic among bank officials and bank management is motivation. It is essential for employees to function at a high levels of efficiency at work. It is dependent on group activities for satisfaction. The drive comes from a human being. A bank manager can assist in the creations to encourage staff to be self-motivated. Through the motivations that have been given, it will be able to help manager to achieve what has been stated to achieve the objective that has been targeted. Controlling is perhaps the most well executed of all the managerial roles in banking. The reason for this is due to the importance of commercial banks in our culture. Every functions appear in banking system should have to have its own sets of reports. This is to ensure that every activity carried out is recorded and reported so that the objective and purposes of the banks are not missed. Many banks have an audit department and does not generally hire an outside accounting firms to conduct a bank audit on a regular basis. Auditing entails checking transactions for accuracy and assessing if they have or they were recorded in accordance with generally accepted accounting standards and banking rules. This auditing process are always be done to make sure that the goals that have been stated is always on track. The last elements of the bank management, we call it the examinations. Bank examinations are an excellent external control to ensure the achievements of a set banking objective and aims. A bank is typically examined once a year by a federal and or all state regulations authorities, with those is financial distress being examined more frequently. So this is the first part related to the bank management. We will continue with the second part, which will discuss about the importance and the problems in the banking management. See you again.